Welcome back, everyone. How's everyone doing? You guys hanging in there? We live in wild times. It's gonna get wilder, trust me. Alright, so I'm just gonna freestyle, bounce around, talk about the news, talk about this, talk about that. I don't really have anything planned. It's just, lately I've been really busy with personal stuff. Sort of took a break. You need to take a break every once in a while because there's just so much going on, and you'll overtrade, overreact, and it's just, it gets a little stressful at times after a while, and months being plugged in to worldly events and what's going on. Honestly, I don't know how Orange Man does it, and how a lot of people in high power could deal with so much going on all at once every day. And things are only getting more extreme, right? Because we are in turbulent times, and it's just the beginning. Now imagine like 2019, things seemed so smooth and fine. Markets were going higher, seemed like nothing could go wrong. Although, of course, I was warning a lot was going to go wrong, not to this extent and this quickly, but it is what it is. So, U.S. Bank reserve requirements are zero. Now, fractional reserve lending, this is how banks work. I've talked about this. When you go to get a home mortgage, the bank needs typically like 10%. That's with low interest rates at the Fed. So if the bank wants to lend out $300,000 for a home, they only need $30,000 on their balance sheet to lend you technically $270,000 unsecured in a way. Of course, you're expected to put down at least, I don't know, probably a 5%, something like that down payment. So unsecured would be like 265,000, something like that. Now it's zero, meaning the bank could lend you $300K, and they don't need anything on their balance sheets on reserve for what is it, collateral. So there's no risk to themselves technically. Now, if they default, if you default on your home mortgage, right? They keep the asset, but they could repossess whatever you put down as collateral. Or technically, they keep the asset anyways, or whoever owned the asset, but whatever you put down as collateral, they could take, which is that's fractional reserve lending and central banking for you. That's how the system's set up. Now, for the private group, there's ways to get homes pennies on the dollar. It's in the files folder for you guys. And during times of like 2008 mortgage-backed securities, massive defaults on homes, they go up for auction, and if you know how to go about it, I posted the book. You could actually scoop up a home for pennies on the dollar. And that's what the banks do, by the way. So this is interesting. The S&P performance overnight versus during the day. So during the day, while the markets are open for the U.S., it seems like the market's flat or trading down. Meanwhile, overnight, the market's being bid up. Now you could get conspiratorial on it, or you could just think of it as foreigners buying U.S. equities, which what is it? Switzerland's central bank keeps buying FANG stocks. They print money and buy FANG stocks. That's ridiculous. The world should. That's not a free market. The world shouldn't. Basically, with their citizens' money, they're buying U.S. equities that are extremely overpriced. This stuff makes me mad. People getting bailouts who own hedge funds. This is interesting. So this guy, he did some TA. Let's take a look at it. So even Schiff is calling for 10,000 an ounce gold after all of this QE. And guys, the stimulus isn't going to end. It's going to keep going and going and going until we finally see massive inflation and the dollar starts, the Dixie, DXY, starts dumping in a massive way. But from a large macro cyclical cycle, uh, every cycle around 10 years, or you can see it right here, 3,288 days, 15,000 days, and 3,290 days. So it looks like you get large bull markets every other decade, going back to 19. Let's go back to early 90s. So it's actually not a large cyclical bull market, but inside the large cyclical bull market, you have bull cycles. It's all fractal, right? So if you're looking at the monthly here, this is the monthly time frame. The next leg up should be a long one. So this one back in it started in 2003, 2002. If you remember my blue equilibrium line back from 2018 when I called the breakout in gold in the new bull market, which I was absolutely spot on. It looks like this next one coming up is going to last longer. So it could last 70,000. Well, no, it would last 2,434 days. The previous bull market lasted 2,434 days. Okay, it's not going to be exactly the same. This one's probably going to last even longer, though. Anyways, the previous bull cycle, from prior to the 2008-9 mortgage-backed security crisis, gold went up 359%. This one's looking to go up 363%. Now, it's not going to be exactly perfect. It's not going to. I think it's going to be more. Either way, we're looking at a target anywhere from 9 to 10. If it turns into a bubble, who knows? It could go to 12, 15,000 an ounce. Now that sounds pretty insane, but you have to take into account the manipulation because the last thing major governments want is gold to rise quickly and actually find real organic price discovery, because they're still all accumulating. All the central banks are still all accumulating. But now imagine if it even gets to 7,000 an ounce gold. For one, silver is going to be in the hundreds of dollars. And then imagine, because right now the mining stocks are still priced around $1,300 an ounce gold and $15, $16, $17 an ounce silver. They're still priced down there, the mining stock shares. Imagine how much upside they have. Like, people aren't going to believe it. And that's the wealth transfer, the ultimate wealth transfer. Alright, let's go back to my Twitter. What is this? Yeah, I talked about that. Karen's. You should follow me on Twitter. I post good stuff on there. So yesterday, Orange Man came out and he said he's actually going to do something about the censorship, and he did. He really did. I'm actually impressed. This is good. This is very, very good. I think you realize how bad it is. I mean, when they Twitter actually censored him, the president. So, I mean, you're just asking for it at that point. I mean, better late than never, right? So here's something else that's very interesting. So national income is the red line. Corporate profits before taxes. And then the Wilshire 5000 total market full cap index. Now this is what you need to see right here. Now, if you look back in prior recessions, which are these gray areas in the background, when corporate profits drop, the market drops, the index drops, and then some. As you can see back here, also in 2008, corporate profits dropped, the orange line. The Wilshire 5000 dropped. Well, look at this. Profits are dropping, and they're still dropping, but the indexes, equities, are rising right now. And this is indicative, and this is evidence of that giant bull trap, possibly. Now, again, you never know, because the amount of stimulus they're pumping into the system, and the fact that other emerging markets right now for the short to intermediate term are suffering more than the US, and so are other countries because everything's dollar denominated, all the debts. People are forced to flee into the US equities markets and the dollar, therefore letting the central banks print more and more. Well, the Fed especially. So the Fed could do another 10, 20 trillion, believe it or not. And we still don't see massive inflation because of this short to intermediate dollar shortage of 13 trillion globally estimated by the dollar strong camp, like Brett Johnson, right? The milkshake theory guy. And we're going to keep talking about that until that comes to an end, which it will. And then Schiff's going to be right, and the weak dollar guys are going to be right. I'm in between. I agree with both of them. It's just the timing of it. So we'll go to TA after all, the news and all that. Today is it's Thursday. It is 10 p.m. the 28th. Futures are slightly negative, nothing serious. Tomorrow, I think we might start seeing the beginning of a major pullback. Maybe even a correction, I don't know. At least a pullback. Okay? And I'll talk about the TA. And that's why I'm making a video now, because I'm warning you the night prior. Although, consult your licensed financial advisor. I'm not a licensed financial advisor. I'm just some guy giving you guys my opinions. We're talking about economics. We're talking about markets and learning how to trade and doing TA, right? And I could be completely wrong. Consult your licensed financial advisor before doing anything, investing, trading. It's all extremely volatile, extremely risky. Do not invest or trade that you cannot afford to 100% lose. All right, let's get to the news. So, by the way, I told you guys, Zero Hedge, they collect articles from all over. It's not like one guy writing all this. I told you guys, Swiss, they buy stocks. They've been doing that since like 2015. Listen, there will never be a trade deal. I made a video on that in like early 2019. Things are just going to keep heating up between Orange Man and Winnie the Pooh. And that's just a new normal. And right now we're literally in a Cold War, and I don't know how bad it's going to get. But everyone has beefing up their military. That's all you need to know. So I don't want to talk about this because it's being hardcore, censored. He's definitely an alien. That's all I have to say about Zuckerberg. Um, if you're still on there, just get off. Come on. Tomorrow, Trump, Orange Man, he's gonna come out with a huge announcement about China and Winnie the Pooh. So we'll see. I think that will be another catalyst for the beginning of the pullback because the gloves are coming off for both. There's no more. In 2019, it was PR, guys. It was PR to hype up the markets, and Trump's kind of smart for doing that. I mean, he wanted the market to go higher, so he had endless phases of trade talks. Although he knew it was going to go nowhere, but they kept going back and forth. Yeah, there is nothing normal about what's going on today in the markets, in the global economy, societally, everything. It's just a shit show. Now, this is insane, guys. Over 40 million jobs lost, jobless claims, in 10 weeks. That makes the Great Depression look like a Sunday school picnic because percentage wise it's much greater, the job losses, but it's really how quickly it happened. It took years from 1929 and into the early 30s for all of those jobs to go away. They literally happened within like 3 months. So the world's never seen anything. The U.S. has never seen anything like this, but so neither has the entire world, and it's happened globally. So right now, it's kind of like the calm before the storm. We're in the eye of the storm. So the first half of the storm was the virus, but the second half is going to be the economy. And right now we're in the eye of it because everyone kind of thinks we're going to go back to normal, and the market's up, right? It's near all-time highs. It's pretty close to all-time highs. It's not super close, but the FANG index is. But in NASDAQ. But and some are still making new all-time. Well, some made all-time highs last week, right? Google, Amazon, Apple. But we're just in the eye of the storm, and it's going to be this summer. It's the eye of the storm. As we get past the end of the year and the election into 2021, I don't know how long they could keep everything together, but I feel like by spring, summer 2021, SHTF is going to really start happening. Because then it's going to really dawn on everyone that, yeah, the economy is not going back to normal. And maybe by then, so many trillions have been injected into the system and ones and zeros have been made out of thin air. I'm talking about fiat currencies globally. That people are going to, at some point, the debt is going to matter. And when it does, and then inflation starts rearing its ugly head, and the Fed has actually achieved its goal of higher inflation, then they're done. The man behind the curtain, like Wizard of Oz, the curtain's gonna get pulled back, and everyone's gonna realize there's nothing that could be done about the debt. Matter of fact, watch Schiff's last video. Very, very. It was another good one, and he explains how this is all gonna play out, because that's exactly what's gonna happen. It's just basic math, guys. this really cannot continue not continue on much longer. I'd be amazed if they could just pull 2 to 3 more years. But at the pace of debt accumulating and the interest on it, and because it's a hockey stick, you have to understand the way Ponzi's work is, in the beginning it could last quite a while, and then you have to keep pulling in more and more money. But towards the end of this Ponzi, it's multiples of itself to keep the music playing. It's what is it? It's exponential growth. So debt is exponential. And Maloney made a great video of how if you double, let's say, a water drop, it'll fill up a stadium. At first it takes maybe days and maybe in the beginning it'll take a week. The first half of it, if you divide it up into 3 quarters, right? 33% to equal 100. The first phase will take a week. The second phase will take a couple days, but the final phase, the third phase, will take a couple hours. And that's kind of how exponential growth works. And when you look at it through a fractional reserve, central banking Ponzi, the way they create credit, that's how credit works. So at first it starts off slow, then it starts speeding up. Speeding up was the early 2000s, and now we're going into the final phase of just exponential straight up. And it's just going to blow up. And it'll happen quick. Now the real economy, collapse in U.S. durable goods orders accelerates in April. The real economy is just absolutely falling apart. First quarter GDP revised down 5% as corporate profits plunge 14%. These are historic numbers, guys. Now, if you thought the first quarter was bad, the second quarter is going to be unprecedented, historic, just insane numbers the world has never seen before. So this was 2008, 2009. Now, first quarter GDP is still not as bad as the worst of 2008-9. But the second quarter, so this was literally the first week of lockdown. That's what the first quarter really has in its data. It's maybe the first or second week of lockdown. The second quarter is 3/4 of it was locked down. So it's going to, who knows how low it's going to go, but it's going to be insane. So what to expect second quarter, I don't know. That's another reason why I think the market is going to pull back and have a huge correction, because once that data starts rolling out, everyone's expecting pretty bad data. But when it really comes out, everyone's going to look around and just go, oh my God. The economy contracted 50%, 60%. We went negative. Right now, the GDP is literally negative 30%. After Q2 earnings for all these major companies, it's going to be insane. These stock valuations cannot, it just makes absolutely no sense. Because even the big companies, everyone's earnings is just going to be negative. And the return to normal rally is maybe going to get a hint of reality. Now, the smart money is going to take profits on this huge bounce. Or we'll get to the chart, right? I'll talk about that in a second. But keep that in mind when I start showing you guys TA. Or maybe I'll just show you TA now. Let's just do it. Mixed with the news so you don't forget. So this is the S&P 500. After Q2 earnings is not going to just go straight up and make new all-time highs. That's insane. Maybe a little bit of reality is going to set in. Right now, I mean, Q2 earnings are still about a month away. I haven't looked. I need to look at the dates when they start coming. But smart money's going to, if they bought this dip as speculation for a intermediate to short-term rally, then they'll start taking profits here, and now we're going to see that pullback. The Fed might come in, right, and prop it up again, PPT, plunge protection, maybe a bounce, but then earnings come out, and I think we're gonna see another huge drop. Because the data is gonna just be that bad. Not just that, who knows what's going on at the time. Maybe tensions with China, maybe more cities are burning down from civil unrest at this point. Now you have to understand that part. I come on. I've been posting how the state's been acting, how they've been stepping way out of their boundaries and doing pretty despicable stuff. So people are fed up, and that's all kinds of people, all race, color, and creed, man. This isn't just one. And I know there's certain funded groups who want to divide everyone and, use it for political means. But at the end of the day, it's just really all the people against overreaching powers, right? Unconstitutional stuff. So, and I expect that, I expect, the summer is probably going to get a little wilder. And we'll see how much more civil unrest happens. And that also, it doesn't help the market go higher because people could become more nervous and they start, that gut feeling of we're not going back to normal. I mean, this is like the end of empires type of stuff. It's falling apart from within. All right. But still, so they're going to do more stimulus. People are going to get more money in the more stimulus checks because, one, it's an election season. Two, it does kind of quell, it keeps them in power, right? People in power don't want to see all this civil unrest, and it just keeps accelerating. Because what happens is once enough people see that the state really doesn't have any power, the people do, people become more emboldened, and then all of a sudden everyone just gets thrown out of power. And that could happen, and it can happen quickly. All right, so I talked about that. Let's go back to some more news. What did I have here on Market Watch? Actually, it's 48 million people have filed for unemployment. Now, people say, oh my God, that's like 25% of the workforce. It's a quarter. Like 1 out of 4 don't have jobs. It's actually worse than that because you're not looking at U6 unemployment. I've done the numbers back in like 2018 or 17. Listen, out of 330 million Americans, only about 170 million had jobs. About maybe a little higher, like 180. I don't exactly remember. But that's population, total population. So that's including the young and the elderly. Okay, so I'm just looking at it from raw, pure numbers of people and people working. So if 1 in 4 have lost their job, so let's round it up to 50 million because it's going to be 50. Actually, I think it's going to be 60 because a lot of people still can't get on the websites and get things passed through to get unemployment. Let's say it's 60 mil. So you had about, let's just be super conservative. Let's say because people were getting more and more jobs in 2019. Let's say about 190 million had jobs, part-time and full-time. Well, 60 million are gone. So that leaves you with 130 million working out of 300 million population, which leaves you with 200 million people not working and about a Jesus. Wow. About one third of the country has jobs. So you have more people outside of the buggy than I mean, you have less people pulling the buggy than so you have two people sitting in the buggy and just one person pulling now. It's not even equaled out. Just from looking at it, from napkin math. That's insane, guys. Now, a lot of people are going to get their jobs back this summer and probably into the fall for holiday seasons. But then later in 2021, a lot of those people are going to lose their jobs again because the economy is only going to get worse. So a lot of people who took the SBA loans and the PP loans, the small businesses, mid-size and large, who took those loans, they have to bring their employees back. But they don't have to keep them forever. And then they're going to see that they don't need them anymore because the economy is not as vibrant as it used to be, because we're literally in the greatest depression ever. And then what they're going to do is they're just going to lay them off again. And then they're going to go back on unemployment. And then the Fed's just going to keep printing, and then eventually we're going to see some serious inflation. Like today, I went out and I bought some DeWalt, good quality, American-made drills, saws, and stuff like that because they're on sale. I also get a military discount, so I'm just going to use it because I'm a veteran, right? So I'm buying up, so on these sales, I'm buying up good American-made quality tools because later they're actually going to go up in price. And you kind of have to think it like that, okay? Now, I'm still not out there buying vehicles and homes. I'm waiting for those to drop in value much more. And that's personally what I'm doing. All right. What else? I really hope I'm recording. Yes, I am. I've done that so many times. You know how horrible it is when you record for hours, but well, you thought you were recording or something went wrong and your volume didn't. All right. Anyways, HSBC. Okay, so all the banks who are short the metals market are like taking their losses and taking their short positions off because they don't want to get short squeezed and lose even more money. Meaning the futures market is going to break. It's going to go limit up, guys, eventually. It's not if, but when. What else is going on? So check this out. Pending home sales plummet 35% year over year. Biggest drop ever as buyers forfeit deposits. So I told you this was coming. Existing home sales collapsed, but new home sales rebounded in April, which leaves pending home sales to break the tie. And analysis expected a 17% month-over-month drop. However, pending home sales disappointed, notably with a 21.8 month-over-month collapse, sending year-over-year sales crashing 34%, the most ever. This is already worse than 2008-2009 mortgage-backed security crisis, to put it into perspective. The housing market is temporarily grappling with the shutdown, which reduced listings and purchases, blah, blah, blah. So while all sorts of narratives about lower rates were puked out to defend new home sales outlier, data, it seems pending home sales did not get the message. First of all, they're not lending. The banks, they're not. So people can't, Especially if they do negative rates. That's why if they can't do negative rates. If they did negative rates, no one's going to get a home loan. So they're not going to do that. That's why I say they're not going to do that. Because they can't be that stupid. Rates are at 0 now. The lowest ever. Or since 2008-9. But it's not enough. I mean, people losing their jobs, scared to buy homes. They want to see how all this pans out in the next year or two, probably. Or they're squatting, and they stop making payments on their existing homes or apartments where they live, and they're just sitting there not making payments. There was another article a few days ago. Something crazy, like 30-40% just stopped making payments. And I believe they passed some law that that's okay for a few months or something. I don't know, guys. Either way, when people stop making payments, you have like a long time before they actually come and force you out. I think it's 6 months or something. I don't know. I heard there's still people from 2008-9 still squatting. It's insane. Or maybe you'll just stop making payments for like 6 months, make one payment, then stop making payments again for another 6. I don't know. What else? Retail store closures have huge impact on communities. Yeah, you think? For one, the commercial real estate owner who was renting out the real estate, the buildings, they're all going bust. And they pay huge into community budgets, into your township, into your city, into the state. Not anymore, because they're going bust. And then so do the retailers who rent the space. For one, sales tax, they're not collecting sales tax. For two, jobs are gone, local jobs. And it just looks bad. I mean, it just looks like I drove into the city where I used to live in the city. And there used to be just hundreds of small businesses in the little town I lived in, or right outside the city. And they're like all empty. And this was like 2 weeks ago. And it just looks like third world. It looks third world to what it used to look like 5 years ago. Like around my... Anyways. So, I mean, let me know how it looks like where you live. It has to start... One of the guys in the private group, he uploaded a video of him walking around one of those shopping centers, outdoors ones, and he's just like wrecked. There was just one after another small business retailer just gone forever. It's like a notice on the window. It's really sad. And small businesses are the backbone of every economy. It's not these big box stores and these 500 fortune companies. Yeah, guys, something's going to break out in the Pacific. It's going to happen because they want Taiwan. And now they're letting... just, you know, you guys can read that title. This election season, listen. If Orange Man doesn't win, the economy's going to just fully just implode. That's all I have to say about that. Is it good or bad? I really don't know, guys. If you're an accelerationist and you're like, the hell with it all, just let it all implode already, then it's good. If you want more time for yourself to prepare, become more self-sufficient, maybe get out, hope that he wins. That's all. That's the only way I look at it at this point. Although he did stop some of the censorship, so that's good for me. All right. So, and that's another reason why I've been making so many videos. People are just getting unsubscribed. At this point, it's like, You know, there's no point of working hard if they don't allow you to grow and they shrink your following and business, right? I'm telling you guys, it's really heating up in the Pacific. What else? Visual tool gauge. I don't know if there's going to be a second wave. Even if there is, I just think everyone's going to ignore it by then, and they're like, it is what it is." I still half the people, if not more, don't wear anything now. Even I'm not even wearing anything. Maybe I should. I don't know. I hope I already got it and I built up antibodies. So restaurants are just not going to come back. Are people really going to go back? No, not enough. A restaurant is an extremely cost intensive, low margin business. Even with the stimulus, even with the bailouts, long term, I just don't see them coming back. It was an inflated market, anyways, prior to all this. And then, Americans are going to start saving money now, penny pinching. And this is the saddest statistics. Americans were spending like insane amounts of money, like 15 to 30% of their total income on eating out. What a waste. It literally turns to shit. You know that, right? Your food? Shitting money down the toilet. I mean, you can eat healthier by cooking at home. Of course, it takes time. Of course, no one wants to wash dishes. I I'll admit it, it's hard for me to do it as well. Half the time I'm eating pizzas. Honestly, you could live off of pizzas, uh, especially veggie pizzas. What I've been doing, I've been living off of organic milk, the Green Machine. It's like a gallon or a pint of or 2 pints of just vegetables and fruits mixed together. It's organic and pizzas. It's a bit because I haven't had time lately to cook or anything like that. So I've just been eating pizzas and that. I've been eating eggs. Eggs are really good for you. Organic eggs, cage free, not the ones because the hormones will go into the eggs as well if you get the non organic. All right. So yeah, I'm telling you, things are heating up against Pooh and Orange Man. All right, I think I'm done with news for now. Let's take a look at gold. Actually, let's start with broader markets indices, and then we'll get to gold if this would load. So the VIX is it's fallen down a lot by now. This is a monthly chart. These are all monthly. Gold popped right back up to 1730 within one day. It was down at 1690 like last night. Um, in the private group, I said, hey, there might be a pullback, a dip, good buying opportunity. Uh, Yields are all the way down. Here's the NASDAQ E-mini. It's on the 7 count on the weekly. These are weekly charts. I'll look at the S&P. The FANG is also on the 7 count. So wherever the NASDAQ and the FANGs go, the rest of the market will go. And another thing to look at for more fundamentals, and so I will use the NASDAQ and the FANG index to time it to the day or the week. But the Russell 2000 is what I look at for a more longer term trade, right? Because the weaker the Russell is, the more it shows you how weak the real underlying economy is, because it's smaller cap companies domestic in the U.S. It's also on a 7 count for the weekly. Does that mean we have 2 more weeks of upside? Not exactly, because if we actually let's go to the FANG index here and look at the daily. to time this better for a possible shorting opportunity. Now, I'm not saying the market's going to crash. I'm just saying I'm expecting a pullback, at the most a correction, right? All right, this isn't going to load. Great. Let's give it a second. Just give me a second. See if I could go to something else real quick. I have a bunch of windows open. I just can't close them for now. Apple still looks like a buy, but look at this. It almost hit new all-time highs. Here's the thing. The tensions with China is very bad for Apple. They make everything there. Yeah, I still think it's a sell. I see a correction coming soon. Like tomorrow. So, yeah, so Apple, Amazon, they're both on 7 counts on the weekly. And I think smart money in the market's going to take profits like maybe a week early, meaning by the end of this week. Also, any bad news event, like tomorrow's speech, could cause a huge sell-off. It's not loading, of course. Alright, well, let's take a look at the Dow. Weekly's not telling me much. Let's look at the oscillators. It's starting to get overbought. Let's go to the daily. Daily's on a 3 count, and the 3 did trade above the 1 and 2, which is usually indicates a 9 count to the upside, but not always, guys. Not always. Sometimes I just go based on experience and gut feeling, which you shouldn't, but I do. And it, it's worked out pretty good in the past. Now listen, it's not just that. The Dow is coming up on the 100 and the 200-day moving average and my blue line. Like 26,400 major resistance area. And I don't think the Dow's going to break back above it. Not in the short term, meaning the next few months. Not just that, it's sell in May and go away. Now, that doesn't always happen, but I think this May it's going to happen because, well, I mean, it's been a pretty intense first half of the year, right? So, I think if you're a big-time trader, you're a hedge fund manager, Wall Street guy, you might want to take a break this summer and just get away from the markets. And I think a lot of them are going to do that, and they're going to get out now. And then wait to see what happens after the summer, going into election season and whatnot. I think that's what's going to happen here. Not just that. Why wouldn't you sell before Q2 earnings that are just going to be who knows how bad? Probably really, really, really bad, right? So psychologically, this is game theory that I'm doing. That's what I think. That's what I think is going to happen either by the end of this week or next week. We're getting a correction or a pullback, something down. And I don't always know how far it's going to fall. I just put on the position, and then I take it day by day. And then once I'm up massively in profit, I take profits, right? I realize those profits. That's how you trade. Also, here we go. Here's a FANG index. Weekly chart. Check this out. The weekly is on an 8 count for the FANG index. And what's been dragging this entire market higher? It's the FANG stocks. It's on a weekly 8, and it's a weak one too. So I would rather be early to shorting than late. And a lot of stocks are on 8 counts and 9 counts right now. So I'm looking for a nice pullback on the market, or a correction. A pullback on the FANG index would take you around 33,400. So this would be a pullback that may be higher, or we'll get a correction. This could take you all the way back down around 3,000, maybe bounce off 3,000. I mean, what you would do here is you put in a fib retracement, look at the moving averages. It'll probably bounce off of this moving average on the FANG index. So this 100-day moving average will go like that. So this would give you nice support. And then you could also put in a fib retracement. I know this is basic stuff, but this basic stuff works great because everyone uses it. Let's bring it down to its previous low, the fib retracement, which was down at 2,460. And yeah, I would see a nice possible bounce. I think if we did get a correction, you'd see a nice bounce around anywhere from 3,000 to 3,200, which would be either the 38.2 or the 50% fib retracement. There, you guys learned something for today on trading. And this is the weekly time frame. The weekly, not the daily. So weekly is like, you know, June, July, maybe into September. Either way, we're looking at Q2 results around this area, right? So that'd be a perfect catalyst. But the sell-off could happen, it could start now. Here's Russell 2000. Daily chart. It kind of caught a bid today, which is weird. Well, the Russell never ran up like the rest of them. So the Russell might trade sideways while the other indices sort of fall, because I think the Russell might have a little more strength now because smaller businesses are opening back up. They were shut off and now they're opening back up. But you could also say, yeah, but that's priced in. This was pricing in the opening. So I think more than likely it's just going to do one of these in the next few months. Here's the Dow transports. Super, super weak. Nothing's getting transported. No goods. Which is a sign of weakness. All right, let's take a look at let's take a look at oil. So I bought oil like down here. And the trade's working out pretty good, but I am long all the way into the fourth quarter of this year. So it's more of like, it's a swing trade, but it's like a 6-month trade. And I'm expecting oil to keep going higher all the way into the fourth quarter, revisiting $50 WTI crude, which would put my option call trade position to some massive profits. And I did it on 3 different ETFs. A lot of people say don't buy those ETFs. I mean, I didn't put on large positions. I put a decent size, but I mostly put it on another energy sector ETF. I mean, speculation. Here's the E-mini light crude oil futures. Huge rebound here. Now, it's not going to go straight up here, you know, unless something breaks out, a hot war in the sandbox, right? Or that strait, the Strait of Hormuz, or whatever it's called. And Uh, I guess the tank. I don't know how much power the U.S. has from stopping like Iran and Venezuela trading oil. I think that the American empire is just pulling out now, and they can make threats, they could do stuff, but I don't think Orange Man wants to start, WW3. Is this still going to happen? Possibly. We'll see. I hopefully not. Hopefully not. But things are heating up again because of China. Anyways, anything bad that happens geopolitically, oil goes up. But oil's going to go up anyways because of just basically people are starting to drive their cars again, and inflation's going to rise. So long term, the next 6 months, I think oil's going back up. Now, I will take profits in the fourth quarter just in case of a second wave, but even so, I just don't think people are going to. There might be a scare, and a lot of people will stay home a lot more in the winter next year, the beginning of 2021, and then it'll be like a lightweight version of what just happened this year, if we get a second wave. Trying to find gold. All right, so here's let's see if I could load this real quick. Please load. Don't do this. It's not loading. Here we go. It might load. While that loads, let's just take a look at gold futures real quick. Again, here's the chart of the GDXJ, or no, it's just GDX. Let's look at GDXJ. Well, look at both, whatever. So GDXJ is the green line, blue line is GDX. GDX is a basket of large cap mining companies, the largest ones in the world. GDXJ is a basket of junior size producing mining companies. These are the most common ones. There's way better ETFs that the private group gets. It had a slight dip in the past few days last week, but it's not that big of a dip. Matter of fact, it's surprising how small the dip is, because gold pulled back all the way from 1770 and it fell all the way down to 1690 at some point. So this might be a awesome buying opportunity, and I'm telling you, this summer we're gonna see, I still believe we're gonna see some explosive moves in metals while everything else kind of trades down and sideways. When we start seeing mining stocks rally and gold and silver, well, from now on, I think silver is going to pull gold higher. But even the days when gold trades sideways or slightly down, you can still see mining stocks rally, because the smart money is going to buy every dip and push the mining stocks higher, because earnings are going to start coming out for these mining companies. And when earnings start coming out, and they're the only sector that's doing good, and spectacularly good compared to every other sector on the in the broader markets, people can't ignore that. Wall Street can no longer ignore the fact that the best earnings are mining companies, and it's going to kick off another bull market. It's that simple. Again, oil is going to pull gold higher. The purple line's oil. This is a weekly chart. Candlesticks is gold. Here's gold, just a monthly chart, just a simple chart so you can see it. This. I would not mind a dip here for next like 4 weeks, a pullback in gold price, but and it trades sideways and then shoots up, because it buys us a little more time to accumulate what we can of mining stocks, but at the same time, it wouldn't surprise me if it just started shooting up like a rocket. Depends what's happening globally, right? Like news-wise. Alright, so let's go back to that chart. Let's see if it loaded. Nope. Alright, let's take a look at gold and silver futures markets. My video just went over an hour. I was gonna keep this under an hour. So look at that. I put this arrow in when the prices were down here. I told you guys it was a perfect buying opportunity. But you had another chance last night because the price actually dumped. This is a daily chart of gold. The price actually dumped overnight, of course, back down to 1682, which is very good. Because this entire price action right here, all this is consolidation. It's basically a spring winding up. It's just a spring winding up for another move higher. And then I'm telling you, once the price gets above 1800, there's no resistance. It's just going to make new all-time highs quickly. And as soon as gold makes all-time highs, silver is going to explode. When silver explodes, it's going to cause all of the mining stocks to explode because it's not just gold, but it's also silver that's going up in value by a lot. And people have to start pricing in revenue and earnings, positive revenue and earnings for all these mining companies. And a lot of these mining companies don't just only mine gold. They mine gold, silver, uranium, or not uranium. Maybe palladium, copper, some, and I also look at the percentages of these mining companies. Obviously, I like the ones that mine mainly silver, but let's say I like a mining company that mines 30% gold, let's say 60% silver, and then like 10% platinum. That right there, and then maybe some other metals. Maybe another 5% copper or something. That right there, a mining company right there is so highly positioned and leveraged to take advantage of this bull cycle in metals. That would be unbelievable. All right, and I like looking at those types, or investing in those types personally. My opinion, not financial advice. Could be wrong. All right, but anyways, this is just consolidating for a huge move higher, and we might be seeing the beginning of it already. So you don't want to miss out. And the window of opportunity, it's still cracked open, but the ultimate opportunity was back in 2016. If you bought a lot, let's say the beginning of 2019, then you got in very early and you're doing very good. If you're getting in now, you're still early and you're still gonna do very, very good, possibly life-changing. But if you miss the next move up and these mining stocks start rallying another couple 100% or something overnight, then you're starting to miss the life-changing opportunity. Right? Anyways, this is a bull flag. So TA-wise, let me, so you can see it. Just another bull flag. And I love bull flags. Let's move this over. So on the daily chart, this is the daily chart. Let's take it to the weekly. Let's just see what we have in store for the next few months. Hold on, give me a second. Alright. Well, we have a green Ishimoku cloud. It's ramping up right here. That's positive. This huge wick right here. This is a nice doji. Bullish one. And, I mean, the oscillators are, I wouldn't say they're bullish. They're neutral, slightly negative. The heat map is fine. So the weekly's not, I would say the weekly's kind of neutral here. Let's take it to the monthly. So the RSI, momentum oscillator. Oscillators are a little overextended on the monthly here. Heat map's not that bad. The count. So, but here's the thing. The TDI, time to mark here. 1, 2, 3 count. That's bullish. That means we're going to get possibly a 9 count to the upside. On the 4 count and the 5 count, they sometimes lag or give you a dip. And then it rises higher and higher on the 6, 7, 8, 9 count. So 4 more months of just going higher. And I hope it melts up. I really hope gold goes to like 2,400 or something. And then the mining stocks will just explode, right? And the reason I want it to melt up, and a lot of gold bugs don't want to melt up, they want a steady climb higher. Well, screw that. I want this to melt up. And then I'm going to take profits on leveraged ETFs and whatever I see that's really high up in my portfolio. And then I will take profits on those, go to cash, maybe put on a short position. We'll see how I feel, whatever. And then we get a nice correction back down. And then load up again for the next wave even higher. To make new, heading towards, who knows, right? 5, 6, 7, 8, 9,000 on gold. That would be sick. That would be the ultimate life-changing trades right there. And then it just goes straight up, because then we start getting major inflation late 2021, going into 2022, and it just shoots straight up. But I want this to happen so I could really just take a lot of profits and spend it on some land or something, right? And then we see the major bull market melt up later in 2021, 2022, when we start seeing some major inflation and the world is really falling apart. And it's going to be very chaotic, and hopefully we'll all be fine and we'll be safe, right? Silver. Let's take a look at silver real quick. Let's just look at the weekly chart. Oscillators are getting up there, but because we have a 3 count trading above a 2 count, that's very positive. That means we're going to get a 9 count on the upside on the weekly, which is awesome, because that means we have possibly 4, 5, 6, 7, 8, 9. We've got about almost 2 months of upside on silver, which could lead gold even higher. But it's definitely, so once silver breaks out and gets above $20, or that's really going to cause the mining sector, the mining stocks, to really explode in price. Let's go to a monthly. So I put this arrow in. I mean, look at this. It's perfect call right here. So monthly looks, I would say, bullish. Not just that, it looks like we're coming to an end of the bear market, right? So this red cloud is from all the way from 2014, and we're about to get a green cloud on the Ishimoku on the monthly time frame. Every candlestick's a month. This also looks like a bottoming pattern. If you look at this. This right here is definitely a bottoming pattern. It's really a giant cup and handle, but it's also, when you see a dip hit new lows, then another huge dip, but it's a higher low, and then you get a reversal back up. That means this right here was the bottom, and we're going into a cyclical bull market in silver now. Alright guys, I think that's it for now. Smash some likes, join the private group, go to my website. It's a one-time fee, then you get the report, and then it's gonna be a little over $10 now a month, because we're gonna start making, I mean, we already have a lot. It depends how long you're in the private group. If you've been in the private group for some time now, then you're already in major profits. But the price is gonna go up because people don't appreciate it. Some people leak the info and data. It's a cup of coffee or a cheap, like a meal at McDonald's is, one meal at McDonald's right now is pretty much what I charge. So I'm gonna raise the price a little bit. I haven't decided how much. Maybe 15 or 20 a month, whatever. It doesn't matter. It pays for itself. So yeah, join the private group, and this is what we do. There's a lot of smart guys in there who come up on opportunities that I miss because I'm only one person, and you know, and we do research. I also have a couple more reports coming out. I think I found some really, really good ones I'm excited about. Just waiting for an email to come back. And because sometimes I do email these companies and I ask them some important questions. Anyways, smash some likes, leave anything in the comment section. Please share my videos. It's the only way my channel grows, and I'll continue to do this. Because if it doesn't grow, then there's no point in doing this. All right, guys. Until next time.